Welcome to this week's Business Tax Update, all the news and rumours that matter to small business owners in the world of tax. So first off, 31st of January's gone. Hopefully you all managed to do your tax return. I know us as accountants get super busy and excited about this time of year and are really pleased now to be the other side of it. And actually now we're looking forward towards the end of the personal tax year and utilising our time to make sure that all our clients are really efficient, using all their allowances and reliefs that are available. However, what did spring to mind suddenly is a lot of people talking about, rushing around getting this last tax return done for the 31st of Jan if they've left it to the last minute. But one of the things that has sort of been forgotten with Brexit and all the other things that are going on is that not that many years ago, it was the Revenue's intention under what they call Making Tax Digital, or MTD as it's fondly known, to make small businesses, starting with the smallest businesses, so not your large multinationals, this is you and I, small businesses, we're going to have to report at least once a quarter. In fact, it's more like 5 mini tax returns a year, and those plans haven't actually gone away. From at least April 2021, the government intended that actually we would have these rules in play. We haven't actually got a confirmed start date, but they said at least April 2021. But for all we know, it could be coming in that tax year. And it was going to be electronic returns that were required, using software and all these things that we've only seen now for Making Tax Digital for VAT. So now if you're VAT registered and over the threshold, you'll already be reporting under Making Tax Digital. And that's had its own challenges. And as a result, what some of the professional bodies did is they actually ran a survey to see the impact that Making Tax Digital for VAT has had on small business. And that was interesting reading. The reason it was interesting reading is that originally HMRC produced a document that said they predicted the transitional cost of applying with all these new digital regulations was going to be at £109 a year. Surprisingly, Federation of Small Business, professional tax bodies and pretty much anybody with half a brain decided that actually that was a lot of rubbish and it would be a lot more money. Surprisingly enough, the results from the initial survey just for this Making Tax Digital, which from my viewpoint is a lot less onerous than it's going to be when we go to, if and when we go to full Making Tax Digital for the self-employed, had way over that. So the study showed that 45% of the people answering this survey actually paid anywhere between at least £109, right up to £500 for their Making Tax Digital sort of transformation, and 12% paid over £5,000. Now, a lot of those would probably had particular bespoke software or something like that, but it's still a lot of money. Even 500 quid, it's 500 quid you didn't need to spend before we went into Making Tax Digital. So yeah, not surprising from my point of view, but all the same, I think it's good feedback when we look to see what the impact could be moving forward if Making Tax Digital is still on for this April 2021. What was more telling for me though was that 54% of respondents actually said they had ongoing costs of at least between £43 and £500 a year. So not only did they have this transitional problem where they had to pay to get accountants to sort it out and everything else, but actually now they've had to go and get this done. And a lot of that could be software. If you're not on software, you would have needed it to be able to submit your digital tax returns. So that's part of the cost. You think even a Xero subscription, which is a fantastic product, it's going to set you back about 280 odd quid a year just to have it and be able to submit your VAT. There are cheaper alternatives. So if you're still spreadsheet based, currently you can use, there's like Vital Tax it's called, and there's a couple of other Excel add-ons that'll do it, and they're really cheap. But I think if you're like a limited company and you want to know where you are with your books and things, you want a software package like Xero, QuickBooks, Free Agent and the like. So you're going to incur those costs that you might not have had before. And this, if this does come around for personal tax as is planned, you're going to have to sort of look into these things if you're not already there. So my point on this really, from a news and rumours point of view, is that to remind everybody it hasn't actually gone away, it's still there. We might well start talking about this as it ramps up towards it and we get more news. I think the government's currently got quite a lot on its hands at the moment, so maybe fingers crossed, we'll see a bit more of a delay on it. But yeah, just bear it in mind that it is not going away and you will need to, I suppose, budget for cost and also for your time. I think that was the biggest thing we found working with clients, is it was a bit of a hassle to get them across that line because they had to do certain things, and we're seeing already that the Revenue and Customs site wasn't particularly amazingly ready to roll when it started, and as a result there's been some teething problems, but we're getting there, and generally most of the returns work. So yeah, something to bear in mind for sure. So the other thing I love to talk about on these updates is to talk to you about things that are happening in the tax courts. So geeks like me that love a bit of tax love to see what people are arguing about in the courts, mainly because a lot of the things that get decided there set the standard. So I think most people think accountancy, there must be a rule book, you can claim this, you can claim that, but actually it's rubbish. Most of it, there is to a degree a rule book, but a lot of it is down to the particular type of business. And I could talk to you about lots of different tax cases that we see where you might think normally, oh, you can't claim close because of this reason, but in this particular case it's okay, and these kind of things. This particular one, I suppose, was of interest to me because it hits home with a lot of small business owners that I see, and this was a lady who was running a social club for a church. So she suddenly got slapped with a £10,000 VAT bill because the revenue believed that she should have been registered for VAT some time ago. So she believed that she was just being a manager for the social club bar, but what she was actually doing is she had an agreement in place, she was paying rent, she actually employed staff and turning well over 81,000, which was a registration threshold at the time. That's now moved to 85,000 in any 12-month period. So she thought that was okay, and I think she basically said, yes, I'm okay, I believe somebody should have registered for VAT, but it's not me, it must be the church. And the tribunals disagreed with her and said, no, you are operating a business. She was keeping the profits and everything else that was going alongside that. She had her own separate bank account, and there was a lot of things there that indicated that she was running a business. The other argument she gave was, well, I didn't really make any money. Well, not making any money is actually irrelevant for VAT, as we often see, because VAT at certain levels in certain businesses can be a challenge, that sometimes actually you make less money when you go VAT registered. So you become successful and have to register for VAT, and if you don't manage it properly, then yes, you can actually make less money, or sometimes it's a cliff edge and it can really cause you an issue. So it's one of the things we deal with as accountants all the time, is helping businesses through that transition. So yeah, the takeaway points from this is really just remembering that VAT is a thing. You know, whether you're doing something for social reasons or charitable reasons, however you view it, you've got to consider what you're actually doing and are you providing a service. You know, if you're banking over 80 odd grand into your bank, then you definitely should be thinking about talking to a professional about whether it's whether there is a VAT liability that's building up here or something else that's going on. So that's that. And of course, the one we see most commonly, we see at least a couple of businesses a year that are new to us that have done this, is track your income. So the VAT threshold, as I said, is 85,000 over that 12-month period. So anywhere in that 12 months you go over it, you've then got 30 days to register. So you've got to keep an eye on your monthly turnover. And we see quite often that clients come to us and say, I think I've got a VAT problem. We'll then calculate this potential client's VAT and turnover and figure out that actually, yeah, they should have been VAT registered and there's a back bill to pay. At that point, it's very difficult in some, especially if you deal with the public, you can't really go back to the people that you've been cutting the hair for and say, can I have all my VAT money so I can pay it to the tax man, please? So it's definitely worth something you've got to keep track on. It's really, really important. And I'd love to see that actually in more software, that they could make a bit more of a proactive alert and all this kind of stuff, but maybe that's something for another day. But yeah, just make sure you track it, even if it's just in a basic spreadsheet or something, so you know where you are at all times on that one. So that's it. Reasonably quiet week on the tax front, and we expect as we move towards the 11th of March, when the budget comes, that more and more news and rumours will start to appear. But for now, there's a couple of points to keep you going, and we'll see you on the next one.